Good morning, everybody. Welcome to the Flow Show. Here we are again. Looks like we might be creeping into summer markets. Things are a bit quiet in the European morning so far, but we do have some moves and some headlines to talk about. So I'll get stuck into that right now. Just a quick look at China. Keep an eye on what's going on there and their fixes. They've moved their fix up to 714. So despite all the moves we've seen in dollar China at the moment, they're keeping their midpoints pretty steady, but edging it up into the 714s now. They've been sitting in the 713s for quite a while. So they're not swinging around as the market is doing. Obviously, the price of CNY keeping close to their midpoint now. For your gold bugs, China didn't buy any gold for the third straight month in July. That's information from the PBOC. That's going to give gold buyers something to think about, because it's been one of the big proper uppers, let's call it that, of gold recently, but no buying for the third straight month in July. We'll look at gold price in a little bit. Over in Japan, Finance Minister Suzuki was questioned about Yoshhida's comments yesterday. Said monetary policy specifics are up to the BOJ to decide, and he has no comment on the Deputy Governor's comments yesterday, maintaining that independence, sort of. They'll obviously speak behind closed doors. We've had the new FX man Mimura out again. He says we don't have specific levels in mind in FX. Our focus is always on volatility, and there is no change in the policy stance from his predecessor Kanda, and that includes intervention stance. So he's straight out the book, the same book as Kanda. He's going to follow the same lines. We did have the summary of opinions from the last week's BOJ meeting, and members agreed that price and growth are in line with the current outlook. They need to monitor the data to see wage gains. A nominal rate at 0.25% is still extremely loose, and that there's been little data confirming sustainable growth. We need timely rate hikes to avoid needing rapid hikes, and a small hike won't have any tightening effects. Now, further within the opinions, there was pretty much the same scenario that we had going into the meeting. Some saw conditions ready to hike, some still wanted to wait longer. What is up in the air is the timing of any future hikes, and given the volatility we've had and Yoshhida's comments, there's a good chance that they're going to let all this die down before they consider hiking again. So we have to wait and see. The market has started pricing out further hikes for the rest of the year, but as we know, that can change in an instant. RBA's Bullock was back to her hawkish self, says they are being vigilant to inflation risks and will not hesitate to hike if needed, and that she doesn't see interest rates coming down quickly, though she threw in the caveat that if the economy does turn down quicker than thought, they would cut rates. People are getting hot under the collar in Switzerland after the moves we've seen, obviously in a lot of Swiss pairs, reflective that drop there that we got from Friday, the dollar getting sold off. One of the business lobbies says the SNB must act quickly against a strong franc. So we had this half decent move down here, this quite big move down here. When those comments were made yesterday, we'd already pretty much done 50% back of that move. So took them 2 days to come out with that, and the move had already half reversed anyway. So got to be quicker than that, boys. Someone managed to catch ECB's Ren walking between the swimming pool and the bar. For a few comments, said the slowdown in inflation continues, but the path to 2% target is still bumpy this year. If confidence in slowing the trend of inflation strengthens, rate cuts can continue, and rate cuts would not hurt Eurozone's fragile growth and subdued investment, which he is concerned about. His next comment was a G&T, please, ice and slice. Anyway, moving on to the US, there's Zilcho data out of note yesterday. The only things really to keep an eye on, we had the NBA data, which had a decent positive uptick in applications, but need to keep an eye on the mortgage rate, which came down by a decent chunk to 6.55%. This is obviously reflecting last week's data, so this is reflecting the mood after the FOMC, so that rate coming down. The lower this rate comes, the less pressure there will be on housing. We know that there's been a few wobbles of late, though that got stopped in the last month. But the lower the mortgage rate comes down, then that eases pressure for mortgages and whatnot. We did get some consumer credit data out last night from the US. That data, I'll find it. Where are we going? That data coming in at, where are we? Down here somewhere. There we go. Just under 9 billion from just under 10 billion expected. Nothing of note in these numbers. No worries. Delinquencies showing up in there, staying steady. No big deals there. So everything's tickety-boo as far as that's concerned. The only other thing we had was the Ivy PMI, which had a bit of a stonker of late, running up to 62.5, but it's had a bit of a pullback to 57.6, missing expectations there, but still quite a strong number in that one. While we're in Canada, we had the minutes of their last meeting as well, and in the minutes they agreed more rate cuts are likely if inflation eases further, but they're not on a predetermined rate path. They agreed to focus equally on the downside and upside risks to inflation. They're concerned that weak jobs outlook could slow spending rebound. Consumer spending in 25-26 could be hit by a number of households likely to be renewing mortgages at higher rates. So there's the BOC also looking at rates in terms of what it means for mortgage owners, home owners. That's about it on the news front. As I say, not too busy at all. We've still got this stuff rumbling on with Israel and Iran, so that's still going. We also had an earthquake in Japan just a couple of hours ago or so ago, which actually triggered a tsunami, but fortunately there wasn't any damage from that. The nuclear reactors around the areas involved were checked and verified okay. I was actually watching a webcam footage of the main prefecture that got hit, and it was all business as usual. They're known about that over there. Yeah, Ali, I'll talk about that in a moment. Michael, yeah, it was a healthy revision, shall we say, a big revision up. So it does make the drop more, but the numbers themselves, there's nothing to be worried about. These numbers can be quite volatile, as you can see there. We went from 6 billion to 11 billion, which got revised to nearly 14 billion, back down to 9 billion. Then these numbers are fairly volatile. Okay, it's really the trend, as always, that we need to watch out for. As you can see, we had obviously the COVID mess. Things have picked up. Yeah, things are softening. In terms of credit, if we start seeing these numbers trending negative, then we've got something on our mind. But more so, it's the ability of creditors to pay back what they've borrowed. That's probably the bigger thing we need to look at. Right, well, let's go over to the quid. Let's stay on the Swissy while we're talking about that one. This one, there's a lot of very similar patterns. You'll note this pattern hitting that low, creeping up, and now we're coming back down again. So for the Swissy, it's following a lot of what's going on elsewhere, stocks and the like. Really, this 85, 80 area is the one we probably should be watching right now. That's where, if we're going to get a pullback, if it holds there, that's going to give buyers a bit of impetus to build on that and have another go at taking it a bit higher. Back under there, well, then it makes the situation look a little bit more bearish still, and maybe we're going to be heading down to these 83.32 lows. So a couple of lines there. I don't have tons of tech on this one. Nice and clean. You know, you can see quite clearly where the levels are, and take it from there. You know, could take this level down at 85 as well into the big figure. But otherwise, look at this 85.50 and then down into those lows around there. Right, over to the quid, and I'm getting a little bit hesitant about this one. I think we might be looking for a little bit of a move down and a break of this support zone down here. The main reason being these bounces off of it are looking very weak right now. This is keeping this trend well in play. So I think just the old spidey sense is telling me we might be heading through this zone and a bit lower. How far it wants to go, I don't know. I would say, if anything, we're probably going to be looking at these low 126s if we get through the half figure there as well. But there might be enough building that we have a quick move down there. I don't think right now we would head lower than that. But, you know, never say never. Just trust your levels. We got a big decent level into this low 126s, the fib 125.80s. So it's going to be maybe a bit similar to this level here. So that's the one I think we're heading to. If we're not going to break down here, we need to take out this 127.40. Again, round about the half figure on this old fib up here, more so 128, more so 128.50. So, you know, the ballpark here, if we get a bounce there, you know, sellers might see sellers coming in 128, needs to get above there to start breaking down this trend. If not, then, as I say, it feels like we might be heading lower. Ali asks about what's going on with the protest stuff. Yeah, there's a lot of headlines. Obviously, it's all in the news over here. It's still pretty contained, shall we say. This isn't wholesale rioting across the whole country, you know, running battles in the streets with thousands and thousands of people. Nothing like that. It's still all pretty small, contained incidents. And if it grows, if it continues, if it drags on, then it might start to have, you know, an effect on investors. Might want to start pulling money out the UK. But yeah, it's immigration protests. It's far right people popping out of the woodwork. But without getting into the politics of it all, underneath all that, there's a general feeling from the wider public that immigration, illegal immigration, let's make it clear, is going too far. But the far right lot have taken it upon themselves to be at the forefront of it, and that's what's causing a lot of the angst at the moment. But yeah, as Gav says, we've still got the overhang of the upcoming budget and the fiscal plans of the new government, which we're still yet to get the full details of, the super nuts of it. But most headlines coming out of that talk about tax rises here, there, and thither. So again, that's not something. Tax rises are not something that businesses are going to be happy with anything. So yeah. There's reasons why the pound is feeling under pressure, but, you know, let your levels do the talking. If we're going to break this 126.70 area, then, yeah, we're probably on our way a bit further south. The same feeling I've got with euro sterling. Obviously, if the pound's going to get a whack in cable or generally, then this one's heading higher as well. And I'm probably looking to be stopped at the 86.30s on my short try up here. As I've been saying, because I'm not overly knowledgeable about what's driving the pound at the moment, I'm keeping trades nice and tight, nice and small. If this was purely on the fundamentals, I probably wouldn't be shorting it, or unless something was happening that suddenly sees the Eurozone outperforming the UK. So the fundamental side of things don't favour euro sterling rising. But as I've been saying, if it's going up on something else and I'm not I'm not keen on that reason, then I'm going to keep my trades short and sweet, shall we say. So if we do get a break up in this one as well, you know, we're getting above this 38.2 fib here, then we've got a bit of a zone, 86.45 to 70. It's just one of these old traffic zones that we've hit plenty of times before, seen plenty of action. Not exactly one I'd trade, but it's where things might run into trouble. The bigger levels above is up at the 87, 87, 15, 20. We know previously, back in early or late 2023, after we had this noise here, it became solid resistance, and that's really the main area above 87, 87.20. But I would not be surprised if we get a move through here if the pound's going to weaken further. Dollar CAD, again, this one still seems to be on the oil bust. We're seeing still a pickup in oil at the moment. Again, I'm not really looking to trade it in the middle here. We have sort of half had a look at the 55 DMA down here. It's holding around there for now, but we are, you know, really in the middle of this few month range at the moment. So I'd rather sit on either side. 136.50 is my first level down below, and then obviously the big zone down here. Going to look at the Aussie, because obviously with a bit of a hawkish slant to Bullock last night, we saw a little bit of an uplift, but nothing huge. We're still holding resistance around this 65 area, 65, 70 area. So we're not getting through that at all. So that's really your market. If we do get a move now, we've had a go before yesterday. If we get a move again, then maybe we are going to push on up, maybe have a crack at the 66 handle. But if not, then you know, we're going sideways, and you need to know if we start breaking down 65, 20, 65s again, then things are going to be looking a bit more bearish once again, and we're heading lower. Stocks as well, not a good night, or not a good finish, shall we say, yesterday. I've got knocked out the balance of my longs 52.12. Bit silly. I took my eye off the ball. I didn't raise when we were trading above 53s yesterday. I didn't bring my stops up. They were set at entry, and that got taken out late last night. But I made money, so that's the main thing. It was only a little bit left that I had on, and that got knocked out break even. But I was slicing and dicing. We're still trying to recover. Okay, this, you know, we had all this period where the market was trying to get it back, you know, pretty much two and a bit days, trying to claw back the losses, and then, you know, one evening, bosh, we pretty much undid most of that. But we're not out, we're not finished yet, I don't think. You know, this low is still the important number down here. The fact that we've staged a bounce into this sort of little area down here, and this is a line that I drew going back when we were coming up this way, so it goes way back. And the fact that we've stopped there, I've just got these trend lines in, not really for trading, just for visual purposes. You know, you could have taken it to there yesterday, but keep that low in the count as well. So we are trying, but we know the levels now. As I said, no guessing needed for this one. Either we get above 53.30s and go on to have a crack at the bigger 53.90, 54, or we don't, and we're going to head down to these lows and then see what happens there. Is that going to mean we are going to continue further? Again, take the trend off the highs. It's still pretty negative, even with this move. You know, we had a similar thing there, broke down. Maybe we're having another one here that's going to break down. So initially, intraday, 51.50 is the number you need to watch. Through there, then we're probably looking at these lows again. 53.30s, get above there, then maybe we build on what we've got for that one. One thing you want to keep an eye on while we're, and I showed this quickly in the room, if you're trading dollar yen at the moment, then you need to keep an eye on this picture, and I'll knock it up again just so you can see exactly what's influencing what. This is walking dollar yen's walking hand in hand with what's going on in the Nikkei right now. It is a pretty similar picture in yields as well. If you look at US yields, but if you're trading dollar yen, keep your eyes on what's going on in the Nikkei, because that is still the main driver at the moment. Things still pretty volatile. We're still trading 14.67% in the volatility. 1 month at the money vols, so vol is still elevated. As we've seen, we've got a bit of a blip on the headlines of the tsunami, but we're back above, or we pulled that back now. But yeah, if you want to know what's driving what at any one time, keep an eye on this until such time as we don't need to. Right, come on, boys and girls. It's a bit quiet. You need to keep me entertained. Give me something to talk about, because really I'm just I'm not doing an awful lot. I've got my levels. I'm looking at my levels, and you know, I'm just waiting for them to come to me rather than go chasing. Let's keep cable on the chart while we're just while we're talking, because as I say, that's still looking a bit weak. Gold. Let's have a look at gold after we got that those headlines. Oh, I've missed it. Where were we? There. So we're turning around the 2400 level, which just this price action again, it just shows we don't really know what to do. You know, if you take it on a bit of a wider basis, let's have a look at the daily. You know, yeah, we're still in a shallow uptrend, but you know, we've had this big move and it isn't really managing to kick on. You know, is that the China influence? Who knows? That certainly that support isn't there, but it's holding up pretty well without that influence. I think this is going to go down to the clock. I think the longer we go without taking out the highs, pushing new highs, then I think the more longs are going to get a bit nervous with China gone missing, and maybe that's what's going to cause us to have a decent pullback. Whether we can get through 23s, who knows? But again, the levels are pretty clear. We need to take out these highs, 2480s, or we take out the lows down here into 23s, 2280s, and then you've got all these little bits and pieces in the middle to mess around with. Silver, you want to have a butcher's at silver. Well, that looks pretty clear to me, Michael. 2610 down is 26 big figure is a level you need to watch. If we hold that, every chance for a bounce. Let's get rid of that. As you can see, not a lot of tech on my charts. And I was speaking to someone yesterday, one of our roomies, just talking about charts and stuff. And, you know, sometimes you don't need a lot of tech on a chart. I have lots of tech because pairs like, you know, if I go just quickly, something like Euro Sterling, you know, it's a complete mess, you could say. But it's always worth sometimes just taking a nice clean chart. That's why I usually have two sets of charts. One that shows me, you know, the bigger, clearer levels. You know, I was mentioning this 87s. We know about the 85s. We know about the 84s. Sometimes you can just trade off simple charts with not a lot on there, or have them at least in your armory just to look back, see a nice clear picture. So yeah, I've not got a lot on the silver, going back to that, but do I need a lot? If I'm going to have a trade, 26 is the level to do it, to try longs. If we break under 26s, we're probably head into 25s, and this traffic area down here, another figure under there, 22s. So yeah, I know, you know, people like, why'd that come back again? I know people like Kay, you know, have tons of text. We all do it. We build up text as we're watching stuff day by day by day. We go into shorter time frames, put more lines in, whatever. But sometimes it's often worth just having a clean chart, just a few lines on it, and makes things nice and easy. Philip, oil, given the bearish fall, seasonality. Philip, I don't care for seasonality, okay? It used to be a thing back in the day. Now it's not, in my opinion. Yes, something like, oh, obviously you get the US driving season and so on and so forth and everything like that. But even that's changing, you know, moving to electric vehicles. Well, what does that do for the seasonality of gasoline over US driving season? So yeah, I'm not a seasonality fan at all. What do we know? We know that demand side is pretty soft. We saw that particularly in the US from the ISM manufacturing number last week, a very soggy number. So we know that manufacturing has been in a slump globally for quite a while now. That's not a reason why oil should be shooting higher, and it's probably the reason why it's staying in this pretty tight range. Now, we obviously got this Israel-Iran situation, which at any moment can get it flaring up. So that's always why you get these upside pressures coming in as well, if there's a big kick-off from there. Going back to the US, I think it was yesterday, it was reported that oil production in the US was up, I think 100,000 barrels a month or per day, per month or whatever in the last count. So now they're producing 800,000 barrels per day. So we've got slower demand and higher production in the US. So that's not a reason to see oil shooting up. So yeah, if you need to take obviously two sides of the coin, demand side and the geopolitical side. And at the moment, it looks like the demand side is weighing out, and you know, that's why we're seeing it softer again in this period right now. Obviously, they're looking to build up the SPR, so the tenders are out. Trump was out yesterday as well, saying they must fill the SPR immediately. Well, let's see what he does when he comes on board, if he comes on board. Dolomex, yeah, let's have a look at old Dolomex. Again, this is the one I'm giving it a wide berth at the moment. I spoke about this yesterday. This 1920s seems to be the level right now. Let's have a look at the shorter term chart. So this fib around this 1920s, okay, we're getting a little extension through, so you know, factor that in as well. But by and large, we are holding above this 1920 area, so it's becoming a bit more of a level right now. So again, that's your guide. If you want to be long, you know that this is maybe somewhere to try with a tight one, perhaps under these lows. Don't need to risk a lot. Failing that, if we're under there, then we're possibly heading down to the big old 1850, which is a level you do need to be concerned about. Again, you know, we've had this move up, we've come down, we've had a pretty tepid bounce, we've come down again. So, you know, just on this price action alone, a bit like cable, you would think that maybe we're heading lower, but it's a little bit of a coin toss. So we need to, if it gets above 1960s, then maybe we're going to have a look at the 20s. So again, on the top side, you know where you're going to be wrong if you're trying shorts, and if you're trying longs, you know where you might want to take a little bit off the table in case it doesn't get above that. So again, not many lines on this one, a few little sort of short-term ones, but you should know my levels by now. I'll look at the 1850, I'll look at the 1740, and that's about it, because those are the big levels that I will look to trade. Ali talking about gold. You don't think Iran will not retaliate? Yeah, they probably will retaliate, but it depends what they do. And I don't know if that's going to affect gold more than oil, because again, gold's coming through all these headlines as well without doing much at all. So maybe it will take something, a big headline in a quiet market, and maybe you get a move. So take that into the context as well. Time of year, summer, things are pretty quiet. In other places, volatility is low. Euro dollar volatility is very low. Matthew, yeah, thanks for those words. You know, honesty, transparency, trading scars. We all lose money, okay? I lose money. K-Man lose money, Blake loses money, Stelios loses money. We all lose money, okay? It's not something people should hide behind. You know, And if you're in places like chat rooms, you don't want to. A lot of people don't want to admit, "Oh, I lost a trade," or "I got kicked out of that one," because there's a pride to it. There is no pride in trading, mate. Okay, there's no pride in trading. If you have pride in trading, you're going to fail. Okay, if I lose money, fine. I don't like it. I hate it. I'm a winner, not a loser. But if I lose money, I know that I've lost money on my terms, and I'm prepared to lose money. I'm always prepared for the loss before I even hit the button. Okay, so it's my mindset when I get into a trade. In my head, I've lost that money. That money's gone already, and because I can deal with that, because I'm not stressing about that when I got the trade on, I can concentrate on managing the trade and pushing the trade forward. You've got to accept defeat before you can accept the win in trading. And if you do that, you take a lot of pressure off, because if you put on a trade and you're, oh, am I going to lose? Am I going to lose? Am I going to lose? And you're watching every tick, and oh, you're up 5 ticks. Oh, should I take my money? Or am I going to lose? If you've got that mindset, you're going to struggle. You need to reverse the psychology. When you put a trade on, consider it lost, and then you plan for it, and then you can move on from there. But yeah, that's why, Matthew, in our trade room is not there to pump how good we're doing and give winning trades and give signals or whatever. It's there to show the thinking behind the trade, how we manage it. Doesn't matter what my opinion is, what Blake's opinion is, K-Man's opinion is on any market. We could all have different opinions on dollar yen. Okay, but if we're going to trade it, we're all going to trade it the same. We're all going to trade it with the same risk management, trade execution, and the same thought process of taking profit, whatever. That's robotic. That's the same for all of us. The fun part is whether it's our opinion or whatever that's going to make the trade worse. So yeah, you've got to have your mind right at the start, okay? And a lot of people come from the wrong direction. When they look at a trade, they think, yes, I'm going to do this trade because it's going to make me X, Y, Z. It's going to make me this amount of money. Don't. When you approach a trade, approach it from the other side. If I trade this, I'm potentially going to lose that, and I'm happy with that. So on we go, and then the pressure's off. Try it. You might find it changes your whole outlook on trading. Right, what else? What else are we looking at? You want to look at dollar China? Yeah, again, I'm not that keen on getting involved at the moment, because what it is it's the volatility that we had. Okay, it's nonsensical. It's too much now. There's plenty of people who say, oh, you could have traded it down here and blah blah blah. Right, fine. Well, I didn't. I'm at that moment. It's that time of year. Liquidity is less in certain pairs, in other assets. So I'm not keen. I don't need to be trading this volatility. I'd rather sit back and see what happens for a few days. See if the levels start reasserting themselves again. And then I can look at what's going on, the fundamentals and everything else, and start dipping in. I've also got a few more days booked off as well. So I've got half an eye on the beach too. So I'm not that keen on getting into anything. But anyway, back to this one at the moment. So yeah, we've had this move down. We're back in the middle. What's going on in the fundamentals? Not a lot. We've seen a tepid improvement in some of the Chinese data. Inflation's still looking a bit soft. They're not out the woods yet. We're certainly not seeing a strong rebound in the Chinese fundamentals. So that to me says that probably the path is for more weakening of the yuan. But on the other side, this isn't yuan, this is the dollar and everything that's going on in the dollar. So the yuan is taking a bit of a backseat in terms of what's going on in the US. So until I start to get some Chinese related fundamental changes, again, it's just staying my hand from getting into this one and trading this one at the moment. Right, anything else for anything else, or I'm going to call it a day? What have we got coming up today? I don't think we've got any data coming up today either. We got Mexican CPI coming out in roughly 2 hours. So if you're trading dollar mix, keep your eye on that one. Let's see if there's any. I don't think I've got it on here. Let's see if there's any expectations for that one. Where is Mexico? There it is. So yeah, so we got the monthly numbers and the bi-weekly numbers coming out as well. So those are ones to keep an eye on. Inflation expected to rise year on year up a decent chunk. So that's going to probably, if that's confirmed and the bi-weekly numbers as well coming a little bit hotter, then we can continue to think that rate hikes are still going to be on the table, but unlikely, shall we say, in the foreseeable. Right, so that's it. US employee. Oh yeah, we've got jobless claims. It's Thursday, isn't it? Again, nothing much to worry about there. Maybe we'll just keep an eye on the headline number, the continuing claims. Still in the 1.8 millions, 4-week average, still in the 230s. Let's just have a look, see what this is doing. So we are creeping up a bit. Okay, it's not big, but we've got a little bit of a trend going higher in these numbers. But really, unless we're sort of over 300s, 350s, heading towards 400s, and that continued claims is getting into the 2 millions, then it's soft landing moves, shall we say, from that one. Right, what you got going on, Ali? Let's have a look quickly. I haven't looked at euro dollar. I'm sure you're in euro dollar. Let me scroll back. So I looked at dollar CAD. What are you now? You're short euro dollar. Yeah, I've not looked at this one much because it's not doing an awful lot. Again, it's just following the rest. As you know, I've been talking about the 109 level. That's your main level down here. Then we've got these intermediates, 109.40, 109.60. You're long, you're short 109.45. Okay, mate, so you're doing all right. So you're tapping up there and you're doing all right up here. So where are you looking? Take profit 108.91. Okay. Well, bear in mind that we haven't thus far after this move managed to get back through 109. So if you're looking for 108.91, you need to take this 109 into consideration right now. You don't want to, for 9 pips, do you want to risk waiting for your TP instead of taking a bit off the table, mate? So have a look at that. Dollar CAD I've spoken about, gold I've spoken about. Right. Yeah, I've done them, Ali, gold and dollar CAD. So yeah, we'll see how your trade's getting on tomorrow. So you can give us some analysis on that. Yeah, looks like cable's going. Here we go through 70s. So keep an eye on the quid if you're trading all quid pairs, and see if we're going to get a bit of a move through, or maybe it's just a little bit of a fake out, and then we're going to get back into the zone. Anyway, that's it for today. Have a great day's trading, everybody, and I will see you nice and early tomorrow. Have a good one.